Hello everybody, it's time for our August 2020 Trade of the Month for our top 30 US equities pairs, and we're talking here about the April vintage. So by August, we're talking about a vintage that has probably decayed a lot, but we have yet to update. Well, actually, that's not true. We have updated the top 30 as of August 21st. We have a vintage out. If you're a member and you have yet to download those new top 30, please do so. Just go to your systems preferences and autoload tab, which you can do just like this, and hit this button and you'll download the latest top 30. However, what we're going to look at today is a trade that exited in August, well, entered and exited in August on the April vintage, and that was to go short on KB and long on SMFG. The trade was called on the 13th of August at 2.72 standard deviations away from the moving average of the ratio. And let's have a more detailed look at that right now. So first thing, who are these companies? First is KB Financial Group, and it's got a 12 billion market cap, a beta of about 0.8. It is a bank, full service bank, one of the largest, if not the largest group in South Korea. Okay, it operates in corporate banking, retail banking, and all other lines of similar services undertaken by full service large financial institutions in the country. And then that's up against Sumitomo Mitsui Financial Group, and that is a market cap of 40 billion, so substantially bigger, but within our ranges, a beta of 1.3. And it as well is Financial Services Banks Diversified, 86,000 employees. KB is Financial Services Banks Regional, i.e. regional as in South Korea. Doesn't say the employee number here. Sumitomo is also provides commercial banking, leasing, securities, consumer finance, and other services primarily in Japan. It does wholesale, it does retail, it does international, and it does global markets. And if you go through the descriptions in detail, you'll see that they're in all the same types of businesses, one in South Korea, one in Japan. So on a fundamental basis, that looks pretty good. The other thing, when you're looking at banks, if you want to really understand their businesses, how they're valued, probably the most relevant multiple is the price to book. And if we look at KB, we've got a price to book of 0.37 currently. And if we look at Mitsui, we've got 0.40, so extremely close. Forward P of 5 on one and 7.3 on the other. So, very similarly valued businesses by the market. So that's fundamentally why we chose them. And the other reason why we chose them is, let's look at the back test. This is the historic back test. As you can see, it only goes up till April when we launched the April vintage. So we're looking at history here. So there were in 3 years, 9 trades, correlated at 75%. Co-integration, it's slightly below 0.9, so wasn't co-integrated but highly correlated. Had a compound annual growth rate of 12% for the pair over 3 years with a very low drawdown, 7.6. Made 4,300 in gross profit, net about 4,000. The average net profit to trade was about 445, and 89% were winners. If you see the equity curve here, very nice. Not much drawdown. Good number of trades, and bottom left to top right, reasonably smooth. Then if you look at the ratio chart, we see lots and lots and lots and lots of zero crossings. So this this pair crosses its moving average of its ratio on a very regular basis. So it looks like it's something good to trade from that perspective as well. That's why it was chosen. Now the signal, if we go back here, the signal was on the 13th of August. So the first thing you do when you get a signal is you check news. You check news whether there was any fundamental value shifting announcement on either of the symbols, or whether either of them announced earnings. Then you also look at dates of upcoming dividends and upcoming earnings announcements to make sure you have enough time on both of those to ensure that your trade can come good, i.e. that there aren't any earnings announcements and there aren't any dividends or ex-dividend date within what is the expected average duration of your trade. And if you don't know where to get the expected average duration of your trade, well, you can go to the back test and look at the average days in trade. So in the back test, the average trade lasted 11 days. So we would want to make sure that if we're going to enter the trade, that there are no earnings announcements coming up within the next, let's say, 15, 20 days. Okay, so to quickly do that, we just jumped on the website. The trade was generated on, the signal was generated on August 13. You can see that for KB Financial Group, there's nothing in its official press releases that would cause that stock to move. Okay, very important. And then if we look at Sumitomo Mitsui, we can see that, where are we? This is also the earnings releases, sorry, the press releases. The last one was financial results in July 29th. Okay, this signal was generated August 13th, so there was nothing new in the market that would have caused the signal. I just want to quickly go back here again. You can also see that the first half earnings release of KB was on the 14th of July. Okay, so both of them released earnings sort of within about a month, 2 weeks to a month before this signal. And what that means is there aren't any earnings coming up in the next 2 months from the date of this signal. The other thing you need to check is dividend. If we quickly go here, we can see that the ex-dividend date was March 27, 2020 here. And this is Sumitomo pays a half-yearly dividend and KB pays a yearly dividend. Well, how do I know that? If you just quickly go into Trader Workstation, KB and SMFG, you can just look at their dividend yields. And if you hover your cursor over, it will tell you when the next date is. On this one, the next date is December 29th, 2020. And on SMFG, the next date is September 29th, 20. Same thing. Both. Sorry, this one's December 29th and this one's September 29th. Now the signal was 13 August, so September 29th dividend is 6 weeks away, far more than the 15 days that we need. So we're clear on dividends, clear on earnings releases, and there is no news in the market that should have caused this move. So what we're likely looking at is a liquidity generated signal. If we look at the share price graphs, you can see that for KB, the market crash here, slow recovery, got to a point where it's up to its 200-day moving average, sort of starting to define whether it's going to really break into an uptrend or whether it's going to stay ranging. It popped up above it for a few days, and that's what caused the signal. And if we look at SMFG, similar kind of trading, but it didn't have that pop. And if you look at the relative performance graph, you can see here, here's that pop. Boom, that's what caused the signal. A divergence in the relative performance, and then obviously it reconverges, which we're going to see in a sec. But if we go back to last year of the relative performance of these two equities, you can see that every time there's a reasonable divergence, reconverges. Reasonable divergence, reconverges, usually very quickly. These are two very similar companies. So when we see that, hey, looks like a good signal, and we've checked it, it's a clean signal. So now we go to our pair charts and say, do we like it? Well, and I'm looking back 2 years on all these charts. Okay, so it gets a little harder to see divergences and the like, but I wanted to do that because it gives more perspective on how the ratio has moved and traded with respect to its moving average over the last 2 years. Here's the signal. And you can see it was at 2.72 positive standard deviations. Go short KB at 34.70 a share. Go long SMFG at 5.80 a share. Okay, at 12.5% from mean. So if we look at the plus minus, we can see that that entry is very similar to other profitable and highly extended entries, both on the positive side and on the negative side. 2.7, i.e., is enough to make us think that it's quite extended. Then we look at the RSI, we also see that the relative strength index of the ratio versus is extremely overextended. It's well over 90. Now that can trend, but you see it's been a vicious move up. We don't see any divergence. Okay, you've got a high here and a high here, and this is moving in the same line. So if your trading plan requires a divergence on the RSI for the ratio, you wouldn't take this trade. If it's just one of the elements and it's a nice to have but not a need to have, then you might still take this trade. And if you look for percent from mean, we're over 12%. Only one time in the last 2 years has it got there. And then on the negative, it's got there about 2 times as well. And both of these where it got there resulted in profitable trades. So prima facie, it looks like something we would take on that basis. You should also check your correlation, see if it's breaking down. The other thing you always check when you trade something like this is look at the volatility. And this bears a volatility of 1.24, which is quite stable. So we'd be taking a full-size position on this, 10,000 a leg. And had we done so, what was the result? Well, you can see the result here in the trade history window. In 5 market days, we had a quick reversion, and the trade made $926.84 based on 10,000 a leg. assuming 10 basis points of commissions and slippage, and that's the net result. So it was a good trade to take. The only thing maybe deficient was it didn't have a divergence in the RSI of the ratio. However, everything else looked great, and had you taken it, you had a nice profit. Remember, we got the new top 30 U.S. equities pairs August vintage, came out on August 21st. We've had some great exits from those already. We'll be doing an update on that for all of our members and prospective members coming up shortly. Happy trading, everyone.